I'm Matt Bouchard with REIT.com here in La Quinta, California for REITWise 2013, NAREIT's Law, Accounting, and Finance Conference. Joining me is Gareth Lewis, Director of Finance with the European Public Real Estate Association. Gareth, thanks for joining us. Perhaps you can start by just giving us a brief overview of the current European regulatory market.
The things that have been keeping us very busy over the last few years have really focused around what's been the regulators and government's responses to the financial crisis. So a lot of the legislation has been clamping down on the sector, if you like, making sure the sector is more tightly regulated than it has been in the past. And for REITs and listed property companies, the issue for us has been we've been caught in the crossfire. So a lot of uncertainty around whether or not we would, as listed property companies, would fall within the scope of much of this legislation. So I'd say that the pervading issue for us has been one of uncertainty about whether we fall within this particular legislation or not. More recently, it's turned a little bit more positive. I think we are now in a situation where, rather than being defensive, the governments and regulators are now focusing their attention more on the growth agenda. Where's the growth coming from? How do we encourage businesses and get them to grow and get Europe back on a sort of a growth path? So that's been a little bit of a shift that we've noticed over the past 6 months or so.
And what does that shift mean for European REITs? Well,
I think it puts European REITs in an extremely strong position. We clearly are a business. Real estate, you could say, as a whole, is a business that is vital to all aspects of a functioning economy. And that's very much a message that we've been pushing forward to the regulators, making sure they're aware of the importance of real estate as a whole in terms of its contribution to the economy, providing a service to businesses and citizens. And I think that for REITs and listed property, we're in an even stronger position than the broader real estate sector, because we as a sector tend to be the ones that act as pioneers in a lot of areas that are important for regulators. So urban development, dealing with the issues of sustainability. So generally, I think we've got a really good and positive story to tell, and we're just going out there and doing it at the moment.
And what are the priority areas that you, as well as EPRA, are working on right now?
Well, we're still dealing with the issues I mentioned around uncertainty. So those issues haven't quite. They're still impacting us and will continue to do so. One of the big areas that we're concerned at the moment is what's called the AIFM directive in Europe, which is regulation aimed at fund managers, and it's one of those areas I mentioned where we as an industry don't believe we are funds. We believe we're operating companies that are real commercial businesses, and so we're still trying to make sure that the regulators and governments recognise us for what we are. Nevertheless, there's still some uncertainty, and the AIFM directive for us seems a little bit like a fork in the road. So we could go one way, hopefully we won't, but we could go one way, which would be to start being recognised as funds, which I think would be a mistake and something we're doing our best to avoid. Or we could be recognised for what we are, which is operating businesses. And that AIFM directive could have potentially knock-on implications for other directives. The EMA regulation that's coming through at the moment, similar to the Dodd-Frank regulation for derivatives. But there are a number of other examples. Financial activities tax. If we were incorrectly deemed to be financial businesses, we might get dragged into that legislation. Whereas we feel we very much belong with the regular operating businesses, the Googles of this world, the Volkswagens, etc. So that's going to be and continue to be a big issue. In Europe, we're going through a transformation period with pension fund regulation, and that coincides with a shift in Europe from defined benefit pension schemes to defined contribution schemes, and in that sense, we're behind where the US have been. Where defined contribution schemes are much more commonplace, and you can see from what's happened here in the US that listed property companies and REITs perform a very important role within that new defined contribution environment. So we see that as a big opportunity.
Well, Gareth, thank you so much for joining us today.
No problem. Thank you.
For more on this and other REIT news and analysis, be sure to visit REIT.com.